We are continuing the chapter cash flow statement. Now we will work out illustration number 44. You give the heading cash flow from financing activities. So financing activities means activities that affect share capital and borrowings. So illustration 44, you are given some additional information. Then one extract of balance sheet is also there. So we will do cash flow from financing activities. Just see your equity share capital figures. Last year, in the beginning of the year, it was 7 lakhs. You have to see the dates very carefully. Beginning of the year means 31st March 2019. Last year's figure is given. Then this year's 31st March 2020 is also given. So these two we have to compare. So the opening and closing you have to take very carefully. So last year 7 lakhs, this year it became 9 lakhs. So what is the meaning? We have issued additional shares. So that is cash inflow. It is a positive amount. So we can write, you give the heading cash flow from financing activities. Cash flow from financing activities, particulars in one amount column is only needed because we are not doing the entire statement. So you give particulars and amount, the column headings, then you can write issue of equity shares. Issue of equity shares. Here we have issued shares for rupees 2 lakhs. That is why there is an increase of 2 lakhs. 7 lakhs became 9 lakhs. In addition, there is SPR, and we have learned in the chapter debentures, SPR or securities premium reserve will be created at the time of issue of shares at a premium. So here we are issuing shares at a premium, that is why there is SPR. So we are not getting 2 lakhs, in addition we are getting 40,000. So it is 2,40,000 your cash inflow, which you can write as a positive amount. The next is 12% preference share capital. Last year's the figure is 5 lakhs. This year it becomes 3 lakhs. So that is actually redemption. That is why there is a fall or there is a decrease. So that is cash outflow, and we have 12%, which means the dividend, which we will take as a separate item because additional information, the second one is regarding this dividend. Okay, this SPR also if you want you can write a separate item, no problem, but you have to consider that figure, that's all. Okay, so now we will write redemption and the dividend we will take separately. Redemption of, the rate is 12%, so write the name of preference shares like this. Redemption of 12% preference shares, the amount you have redeemed is the difference, that is 2 lakhs. Okay. The dividend we will consider when we take adjustments. There is no problem even if you add dividend with this 2 lakhs. It is done like that in your textbook. They have added dividend with this 2 lakhs. You can also do in that way, but I will be taking it as a separate item. Okay, next one SPR we considered already. Then debentures, last year 3 lakhs, this year 4 lakhs. That means there is increase of 1 lakhs because we have issued additional debentures. So you should write issue of 12% debentures. What is the amount? The additional amount is 1 lakh. Okay, last year it was 3 lakhs, now it became 4 lakhs. So 1 lakh is the additional debentures. Then we will go through adjustments. First one, interim dividend on equity shares at the end of current year was paid at the rate of 15%. So we are going to pay dividend, interim dividend on equity shares, and the rate is given 15%. And for equity shares, we have 2 figures, opening 7 lakhs, closing 9 lakhs. The question is, on which figure you will compute this 15%. So for that, they have given a hint, like we are paying at the end of current year. This year ending we are paying, and you read adjustment number 4, new shares and debentures were issued on the last date of current year. Which is the current year here? The current year is 2020. And the last day of current year means it is 31st March 2020, on which date we are issuing shares or additional shares or new shares we are issuing on 31st March 2020. Understood? So that increase of 2 lakhs, there is an increase of 2 lakhs in equity shares, but that additional shares were issued only on 31st March of this year, current year ending only, we have issued additional shares. So on which amount you are supposed to pay dividend? On 7 lakhs or on the opening balance. Did you understand? Because it is said in the adjustment, like adjustment number 4, additional shares were issued only on the last day, 31st March of 2020. So you need to pay only on 7 lakhs. Understood? Now, if that adjustment was not there, what will you do? In that case also, you can assume that the additional shares or additional debentures were issued on the last date. You can assume in the same way. Understood? So, here we will compute on 7 lakhs, that is interim dividend on equity shares. On 7 lakhs, we will compute that rate of 15%. So that is 7 lakhs into 15%, 1,05,000, and it is something which we have to pay. The company has to pay this, so it is outflow, so which should be written within negative, within brackets. It's a negative figure. So 12% preference share capital is given, and the second adjustment says that dividend on preference shares was paid. So that 12% is the dividend rate. The rate or the return on shares is usually referred as dividend. So here the return is given like 12%, which we have to compute on the opening value. So we will write dividend on preference shares. So that is 5 lakhs into the dividend is 12%. 5 lakhs into 12%. So that is 60,000, which we have to pay. So write it as a negative item. Okay, that is minus 60,000. Then preference shares, third adjustment, preference shares were redeemed at a premium of 5% on 31st March 2020. Okay, so the redemption is done at a premium. Just like we issued shares at a premium, equity shares were issued at a premium, that time we considered that premium amount. Similarly, here also there is a premium of 5% on preference shares. That means at the time of redemption. And here, what is the value of preference shares you redeemed? Last year it was 5 lakhs. This year it became 3 lakhs. That means you have redeemed an amount of 2 lakhs. On this redeemed value, you are supposed to compute this premium at the rate of 5%. So we can write like this: premium on redemption of preference shares will compute on the redeemed value 2 lakhs. Neither on the opening nor on the closing you have to compute on the redeemed value, because this is premium on redemption, and which we will write as a negative item minus 10,000. Or else you can add this 10,000 with that 2 lakhs which we redeemed earlier. Understood? We have already written 2 lakhs, no? That time also I had told you, in your textbook they have added 10,000 with this redeemed value. That also you can do, just like we added this SPR. Okay? Both ways are correct. So now adjustments are over. You just go through the balance sheet items once again, see whether we have considered every item. Equity share capital, yes, we considered. 12% preference share capital, redeemed value and the dividend we considered. SPR we considered. Then 12% debentures, we considered the additional issue 1 lakh, but did we consider that 12% the rate of interest? No, we haven't considered yet. So that interest of 12% now we have to pay. Understood? 12% means it is the interest. On debentures, the return is referred as interest, and on shares it is referred as dividend. So here it is interest on debentures at the rate of 12%. So we will compute 12% on which value? You have to compute 12% on 3 lakhs, because it is said in adjustment 4, that is additional shares and additional debentures were issued on the closing date. So we need to compute the rate of interest on the opening figure. So that is 3 lakhs. 3 lakhs into 12%, which is 36,000. You can write that also within brackets, because it is interest to be paid, it is cash outflow. Now we can compute the cash flow or cash used. If you get the final answer as negative, here it is negative 71,000. So if it is a negative figure, you must write it as cash used in financing activities. Okay, so this is cash used in financing activities. Now we will work out illustration number 52, which is a cash flow statement question, which is a comprehensive question, and we have adjustments with this. So similar question you will be getting for your board exam. This will be coming for 6 marks. Okay. Yes. So balance sheet is given, note to accounts is given. Below that there is a note like dividend proposed, that is proposed dividend for the year ended 31st March 2019 and 2020 are rupees 60,000 and rupees 80,000 respectively. Additional information is also given there. So proposed dividend, it is written in the format already. Proposed dividend you have to take for the previous year. So it is proposed dividend for the previous year. That means which figure you will take? Previous year's is 60,000. Understood? So proposed dividend for the previous year, we have to, what should we do? We have to add it back when you compute that cash flow from operating. That means in the beginning itself, net profit before tax or net profit as per statement of P&L when you write, with that we will usually add items that reduces profit. So this proposed dividend for the previous year we have to add there. So before you work out this question, just go through the format. Just learn the format properly, otherwise you can't follow this particular question, because this is a comprehensive question. Okay, so go through that format first, learn it, no need to by heart, but you just you should have an idea regarding what all items to be added, what all items to be deducted, why we are adding and why we are deducting. So you should have an understanding, no need to by heart, then you come to this question. Okay, so we'll start with ledger accounts. And why we are doing ledger accounts in this question? Because read the adjustments. We have an adjustment for building. The first 2 adjustments are related to building. Then we have an adjustment for tax provided. Okay. So if you have 3 information relating to an item. So here for building we have 1 opening balance, then closing balance, 1 additional information. So altogether we have 3 information. Opening and closing balances are given inside the balance sheet. Then adjustment is also there regarding sale, regarding purchase value and all. So anyways, 3 additional information relating to building we have. So we have to do ledger account for building. Then we have tax provided. That means there is an adjustment for tax. Just see the balance sheet also. We have opening value and closing value for provision for tax. Did you see that not to accounts? So we have 3 information there also. So you need to do building account and provision for tax account. Now next question is, should we do accumulated depreciation? Just see your balance sheet. Did they mention anywhere this accumulated depreciation? No, they haven't mentioned. So accumulated depreciation account is not needed. We'll do building account and provision for tax account. So building account, particulars amount, we'll start with the opening balance. To balance brought down. Take it from the balance sheet, but see the dates very carefully. Okay, the opening value is 6 lakhs, that is 2019 figure. Immediately after that you can write the closing, that is by balance carry down, which is 6 lakhs. It's the same thing, right? Yes, opening and closing, here it is same. So whatever you write, it will be same, it will be correct, but always remember it is not like that always. So you have to take the opening figure as the opening balance, and opening figure when you take the first year, what they give usually is closing date or closing year. Understood? The second year is 2019, that is your opening. So write very carefully, and being an asset account, the opening balance must be always on the debit side. These two you should do very carefully. The opening balance of assets account always on the debit side, and the opening figure, the date also you have to note very carefully. Now we'll read adjustments. So this is the first step, write opening and closing balance. When you write closing balance, as I told you, you have to leave 3 lines here. On the top you leave 3 lines, then you write the closing balance. And here it is written like building was purchased for rupees 75,000. What is the journal entry? Building account debtor to bank account. It is to bank. We have written in the format also. Usually this will be taken as balancing figure, but here it is directly given. So to bank. Then old building, the book value of which was 63,000, sold at a loss of 5,000. So what will be the sale value? Book value and the loss you can compare, isn't it? So 63,000 minus, since it is at a loss, you have to deduct that. 63,000 minus 5,000, your sale value will be written as by bank. This is purchase value, this is sale value, which is 63,000 minus 5,000, that is 58,000. Then you have to record, immediately after you record the sale value, you should record the profit or loss on sale. And here the loss is given like 5,000, which we can write as by loss on sale, that is 5,000, directly given in the question. Now the account is over. Usually we will have to write by accumulated depreciation if there is accumulated depreciation, or if there is no accumulated depreciation, you will write it as by depreciation. Okay. So in this question, depreciation will be taken as the balancing figure, because there is no hint regarding how to compute depreciation, and it is not directly given also. And purchase figure, which usually will be taken as the balancing figure, is directly given. That means shortage would be of course on the credit side. And I told you when I explained the format, if sale value is given, you should assume the balancing figure as depreciation. Understood? But if the asset account is a land account, don't take it as depreciation, because don't charge depreciation on land. You should consider it as sale value. Or else you can either consider it as sale value or depreciation. Here, since sale value is already given, we will take the balancing figure as depreciation. And it is not by accumulated depreciation. There is no accumulated depreciation in the question. You just have to write it as by depreciation, and the balancing figure is 12,000. So that is the difference figure. Then you can write the totals and close this account. The next account, what you have to prepare is provision for tax account. So provision for tax account, as we all know, this is a liability account. In liability account, opening balance must be written on the credit side. It must be written as by balance brought down. So the opening balance, take it from the question, 2019 figure you have to take, that is 40,000. Immediately after that, you can write your closing balance on the opposite side. Just leave one line on the top, and the closing balance is 70,000. Okay, then we will read the adjustment. So first step is always write the opening and closing for every account. Then tax provided during the year is given like 80,000, which we should write as by statement of P&L. So this is tax provided, or you can write it as tax made, and the figure is 80,000. Did you understand? This is the tax provided for the year, which will transfer to P&L. And now you can balance this account, and the balancing figure will be written as to bank. This is tax paid. When you pay something, it will be to bank. So that is tax paid amount. That is the balancing figure you have to take. So here the balancing figure is 50,000. Understood? Now in case if in the question tax paid was given, so what will you do? After you write the opening and closing, you will write to bank, the paid figure you will write. Then balance this account. This will be the balancing figure in that case. If this is given, paid will be the balancing figure. If paid is given, made will be the balancing figure, which we have to write as by statement of P&L. Now when you do cash flow statement, where should we take these two figures? See, tax made means that is the provision for tax for the current year. Provision for tax for the current year, what should we do? We should add it with that net profit. It is there in your format because that's something that reduces your profit. Now towards the end, that means towards the end of your first section, once you get cash generated from operations, from that you should deduct this tax paid of rupees 50,000. Okay, so cash generated from operations less income tax paid, you can write, that time you should take this 50. So this to be added like provision for tax for the current year. This is tax paid, income tax paid, which we will deduct once you get cash generated from operations. Okay, so the cash flow statement will continue in the next video. So you should be thorough with how to do ledger accounts and in which question you are supposed to do ledger accounts. If we have 3 information, you will have to do ledger account. So only 3 ledger accounts we have in this chapter, that is fixed assets account, accumulated depreciation and provision for tax. Here we don't have accumulated depreciation because in the question they are not mentioning anything about accumulated depreciation.